Welcome back, everyone, to a continuation of the Forex trading series for beginners. We are continuing on today with a lesson discussing demo trading real quickly before we get into the lesson after this, which you guys will obviously see tomorrow, and kind of the reason why I want to preface that lesson with this one. So, demo trading your way to success. As you guys know, we are following the curriculum for the most part of babypips.com for this series until we get into some of the more complicated advanced trading techniques and strategies that I myself have developed and used. But before we do that, obviously I wanted to cover a nice curriculum that is free for you guys to go ahead and check out over on their website. So we are leaving all of the corresponding pages in the description below, so you guys can check out those specific pages that line up exactly with these lessons. So why don't we go ahead and get started. First off, discussing what is a demo account. So this video is going to be really quickly, but I wanted to make this video a standalone topic because I think it's something that a lot of people brush over because they think trading is going to be super easy once they go through any type of course or curriculum or learn anything about trading. They think they see 3 indicators that is going to tell them when they're going to buy and sell all the time. That's simply just not how real active trading works. So demo account allows you to trade the foreign exchange markets and really any other market. Demo accounts are available as well. If you guys have ever played like a simulated stock trading game in your high school or anything like that, that's basically what a demo account is. So it's pretend money. So you still have most of the capabilities of a real live account, but you're not trading with real capital. So there's no risk associated with the account. So most brokers offer a demo account with $10,000, $50,000, normally $100,000 of simulated capital so that you can practice before performing with your own funds. The amount of capital really doesn't matter because you're going to be using the same risk management strategies regardless of the amount of capital you have. That shouldn't really make a difference, but those are normally the amounts that they'll give you on, for example, Forex.com or Owanda or TD Ameritrade. I think is actually 200,000 or 100,000. But again, the monetary amount doesn't matter. So the purpose of a demo account is that brokers want you to learn and practice on their platform with zero risk so that you can at least build up some type of confidence level. And this isn't necessarily so they hope that you are successful. Obviously, it would be great if you are successful because the longer you stay on their platform and make trades, the more money they do make. But for the most part, they just hope that you enjoy their platform and then deposit real money into an account. And that's when they get paid, when you put money in the account. And then a statistic that we'll discuss in tomorrow's video is that about anywhere from 70% to 90% of traders across any market do end up losing money. And a lot of people lose their entire accounts. And that is how brokers make money. They make money off of the probability that the majority of people that put money into a live account are going to make losses and then withdraw the rest or blow up the entire account and lose all of their money. So a demo account allows you to learn about the mechanics of Forex trading and test your trading skills and processes with zero risk. So a few tips for demo trading that I wanted to discuss before we close out this video. First off, you should demo trade until you develop a solid, profitable system before you even consider putting real money on a trade. So a solid, profitable, and consistent system, that's going to include a few different things, but really you need to make sure you have not necessarily, you don't have to have a piece of paper, but whether it's a piece of paper, a Google Doc, or whatever you prefer, listing all the steps of your trading system, the different processes you go through step by step before actually placing a trade, but how you basically think about a trade, form an idea, and then execute a plan on that trade. You need to get used to doing that, and a lot of people just try to jump into trades based off different criteria every other night or every other time they place a trade. They'll use different pieces of information to place a trade, when really it needs to be a consistent and repeatable process that you do every single time. And that's the only way you're going to end up being profitable at the end of the day. So there's no need to open a live trading account until you are consistently profitable on a demo account. So trade with a demo account for at least 3 to 12 months. I definitely recommend this one. You can even go longer. You don't necessarily have to go longer than a year, but I would say 3 to 6 months is a good place. And then if you do put real money into an account, again, you need to make sure, obviously we'll discuss more in tomorrow's lesson about this, but you need to make sure you're in a good financial place, and that the money that you do put in, you're willing to lose all of it, even though we don't want to do that at all. But you need to keep in mind and have the mindset that if I lose all of this money that I put into this account, I'm still able to pay my bills, pay my debts, and have money left over every single month, and to be able to survive off of that money. So that's a big thing. A lot of people think they're going to get rich and be able to start being a full-time trader right away with $1,000. You're just not going to be able to do that. Maybe if you start off with $1,000 and in 3 years you could build that up to a nice part-time or full-time income. But expecting to be a full-time trader within 10 days after depositing into a live account is completely unrealistic. So concentrating on trading one major currency pair, this is a nice tip because it allows you to kind of focus on something that has a tight spread, and also something that's very traded by many traders, and respects a lot of the technicals, and a lot better than some of the minor currency pairs that may be a little bit more of a macro fundamental trading strategy that is needed for that. So we'll discuss some of those things a little bit later, but focus on improving your trading processes and creating good habits. We touched on that a little bit. You need to make sure you have a repeatable system in order to be successful, and be executing that system every time you sit down to analyze for potential trades, and then actually planning out and placing a trade. And then, of course, like I just said, follow a system, step 1, step 2, step 3. So that is all for this video. Again, wanted to make it pretty short and to the point, but I did want to make a standalone video talking specifically about why it's so imperative that you guys make sure that you start out demo trading before you put any real money on the line. And then once you do put real money on the line, it definitely should not be your entire savings. So hope you guys enjoyed this lesson. Again, we'll touch a little bit more on some of these topics tomorrow, but for now, we will see you guys in the next video.